Good morning, traders and investors. Welcome to your daily market outlook for May 21st, 2025. If you woke up to a sea of red on your screens, you are not alone. Indian markets took a significant hit yesterday, falling from their recent highs. So, what exactly happened and what can we expect as we head into today's trading session? Let's dive in. First up, let's talk about the domestic front. It was a tough day for the Indian equities. The Nifty 50 plummeted 261 points, closing down 1.05% at 24,683 levels. And the Sensex, it saw an even sharper fall, plunging 872 points or 1.06% to close at 186 levels. This broad-based sell-off indicates a clear shift in market sentiment. The market breadth was overwhelmingly negative, meaning more stocks declined than advanced across the board. The pain was felt across several key sectors. Auto stocks were hit hardest, plunging 2.17%. Heavyweights like TI India, Hero MotoCorp, and Bajaj Auto saw significant declines of 3% or more. Pharma and healthcare weren't immune. It also eroded 1.41%. Lupin, Zydus Life, and Cipla faced significant drops, though JB Chemical and Ipca Labs managed to show some resilience and were closed in green. FMCG also took a beating, and it was down by 1.32% with Imami, Colgate-Palmolive, and VBL all falling over 3%. Metal sector also saw a dip, and it was down by 0.59%, with Hindustan Zinc, JSL, and Jindal Steel being the major losers. And finally, the IT sector was also in the red and down by 0.52%, led by losses in Oracle Financial Services and Tech Mahindra. Now let's gaze out globally. The international markets traded indecisively, showing a mixed bag of performances, which likely contributed to our domestic weakness too. In Asia, we saw some positive moves. Hang Seng was up 1.49% and Shanghai gained 0.38%, while Nikkei traded relatively flat. European markets generally showed the strength. The FTSE gained 0.94%, the CAC rallied 0.75%, and the DAX was up 0.34%. However, the US markets, which often influence global sentiment, ended lower. The Dow was down 0.27%, and both the S&P 500 and Nasdaq fell 0.39%. This mixed global picture suggests a lack of clear directional bias internationally, adding to the uncertainty. Now moving on to the commodities market, it was also a negative day across the board. WTI crude closed at $62.46 per barrel, down by roughly 0.37%. This slight dip in oil prices could offer some relief on the inflation front, but it's a small movement in the grand scheme of the things. Gold continued its downward trend, closing at 95,020 rupees per 10 grams, and it was down by roughly 490 rupees overall for yesterday. And silver also saw even sharper fall, closing at 97,000 rupees per kg, down by a significant 1,000 rupees. The fall in the precious metals often suggests a shift away from the safe haven assets. But the broader market sentiment indicates that there is a caution that prevails. Now let's read the chart and the open interest analysis to understand how the market is expected to perform today. So we are in the Nifty 50 chart, and this is the daily candles. So, as you could see, we had been consolidating for the last 2 days at the higher levels, and we were unable to close the previous, highs of around 25,160 odd levels. And from there, we consolidated for the 2 days, but we could not, close the higher levels. In fact, yesterday we opened little high, and then from the higher level we started seeing a significant sell-off coming in, and this sell-off continued throughout the day, and this pressure had led to shave off of entire rally that we had seen, significant rally in the previous 3 days before. That has been totally shaved off. So we see a kind of bearish Marubozu or uh, kind of in bearish engulfing candle. So now this suggests that the sell-off might continue from here on, and then in the coming weeks we could see further downfalls to appear. So we could head towards the range of 24,400 odd levels initially, and if we are able to sustain, we might see some kind of consolidation in this phase. Else if this further downward trend continues below even 24,400 odd levels. On the higher side, for us, the first trigger would be the yesterday's high, that is 25,000 odd levels, and then the previous day's high, that is 24,150 or 160 odd levels. So these are the levels on the resistance side. So if we see the up move on Nifty happening beyond these levels, only then it is longs. Else if we will be in a consolidation phase or a sell-off in the coming days. So today, in fact, the Gift Nifty suggests positive opening. So we have to see if we sustain in the previous day's range. That is 25,000 on the higher side and 24,670 odd levels on the lower side. So if we trade in this overall range, then we might sustain and trade range bound today. Else if we start trading below 24,700 odd levels, then we will open towards 24,500 and then approach towards 24,400 odd levels. Below those levels, we have to be cautious and then only take the sell call positions or be on the downward trajectory and close off all your long positions. So this is what is the market or the chart suggests. Let's read from the perspective of open interest. So on the open interest, as you see, at the higher levels, that is 25,000 odd levels, we see some unwinding of the positions on the put writing. So this suggests that the put writers are not confident and then they do not expect now for the 22nd May expiry Nifty to move or head towards 25,000 odd levels, and that is when you could see a significant open interest positions also got built up on the call side. So roughly around 40% of open interest positions were seen. And on the other side, if you see at all the lower levels except maybe 24,500, we do not have any significant support coming in from the put writers. So since this is a round level, that is when you are seeing good support, but then overall there is a negativity or kind of bearish sentiment that had already got triggered on Nifty. So today's closing is again going to be significant because this is going to decide whether Nifty will again be able to reclaim back to 25,000 odd levels, or we would hover in the range of 24,500 to 25,000 levels for this week. So for us, as long as 25,000 is not crossed, we should not go longs. So we should be in a sideways kind of range until 24,500 levels is triggered. Post that, it is better to take the sell-off kind of positions because market could significantly continue to fall from there. On the PCR front, it is zero point 0.5 and overall and it is 0.56 at the money, which is again not significant, and this does not even suggest any kind of bullish move. So it is all neutral, and today's closing would be a deciding factor whether we should be on longs or take sideways kind of positions, or continue on the sell off below the 24,500 odd levels. On the Sensex as well, we saw bearish engulfing kind of uh, pattern, and then there were like two trading sessions of consolidation or sideways movement, and then a significant sell-off, which shaved off the entire gains the previous 2 days what we had made. Now, since Sensex is trading at the crucial levels of 81,000 odd levels, which is again the round off figure. Now, if we see today's opening to be positive, and if immediately again the sell-off comes today, then we are headed towards the downfall. Now, this downfall could trigger towards the first or immediate support of 80,000 odd levels. And on the higher side, the resistance remains as 82,500, which was the previous high that we had seen, 500 to 700 odd levels. And only if we cross below beyond those levels, then we should consider it as a positive uptrend to move ahead towards 83,000 and beyond. Now, there is a big range of 82,500 odd levels and 80,000. So we might hover in this range for the next weekly expiry for Sensex. Now, from the perspective of open interest, in fact, open interest shows a different picture altogether. So we see a significant support at 81,000 levels that is emerging for the new expiry, in fact, for 27th May. Now, what this suggests is that despite the significant sell-off that we had seen yesterday, however, for the next weekly expiry, we see that the put writers are significantly holding the positions, or in fact added roughly around 70% of open interest positions at 81,000 levels. And similarly, at 82,000 levels, we saw roughly around 60 to 70% odd positions again being built up. So this suggests that we could, see good support at 81,000 levels primarily, and then we would hover or approach towards 82,000 odd levels, because there is a good buying interest that is getting emerged in this entire range. So though Sensex had closed 81,000 odd levels, but still the support is going to be there today on Sensex, and we might significantly move higher towards 81,500 in the initial stage and towards 82,000 odd levels for this 27th May expiry. Though yesterday was the first day, or maybe today would be the first day for the position, so we will have to see how the open interest gets built up today as part of the today's trading session closed, and then post that we could get a clear picture as to how the market is headed towards. But then on the open interest perspective, compared to the charts, it is likely that we see some positive moves that are expected to come in Sensex on the longer side. Yes, we do have at 82,000 significant open interest built up on the call side. However, yes, we have to wait and watch as to if this could act as a stiff resistance, else if we will move beyond 82,000 levels too. From the perspective of PCR, it is overall zero point 0.8, which is bullish to positive, and at the money it is 1.04. Even this is significant. Now, on the Bank Nifty actually seemed to be positive for the last two trading sessions. However, yesterday, along with the major indices, even we saw uh, Bank Nifty, selling off. Now this sell-off would further continue provided we trade in the range of 54,800 and above. In case if we see significant sell-off coming in at uh, or below 54,800 odd levels, then we would see a significant selling pressure towards 54,000 levels primarily as a support, and then on the resistance side, the previous high what we had made, that is around 55,700 odd levels. So this would be the range for us as the first trigger of resistance. Only if we cross beyond 55,700 odd levels, then we would head towards 56,000 odd levels, which was the previous 52-week high which we had made. And then if that positivity continues, then we will move ahead towards 56,500 and 57,000 odd levels on the higher side. Towards the support, 53,500 acts as the significant support for us from where we saw a reversal on the higher side. So these are the zones on Bank Nifty on the charts. Let's read from the perspective of open interest. So, despite Bank Nifty had closed below 55,000 odd levels, we did not see a significant open interest unwinding. We still see, compared to the call side, there is a significant or double the positions that are being held on the put side. So this again would act as a strong support as long as we close above 55,000 odd levels. Even we see some open interest built up at 55,500 odd levels on the put side, which suggests some buying interest here. And once we move ahead at beyond 55,500 odd levels, we would definitely see some support coming in at these levels, and then we will see open interest position getting built up even at 56,000 odd levels. So we have to start trading beyond 55,000 primarily, and then gradually 55,500 should be the range. Once if Bank Nifty moves, we could see immediate strength coming in at the lower levels. So we comparatively see from the call side, put writers are holding significant positions at the lower levels. Similarly, on the higher side, we do see some open interest positions that got built up yesterday on the call side. But yes, today's trading session is going to be a decider for Bank Nifty, as it has to approach or close beyond 55,000 odd levels, or maybe trade in the range of 55,000 to 55,700 odd levels in the initial stages. And then if it sustains and takes support at 55,500 odd levels, then we are headed towards higher levels towards 56,000 in the coming days. On the PCR front, it is slightly positive. Overall, it is zero point 0.7 and at the money it is 0.84. Lastly, on the FINNIFTY, even FINNIFTY we had seen there was a good positive sentiment that had built in. Then we significantly saw yesterday the sell-off that came in, mirroring across the major indices, and then this sell-off almost shaved off the previous 3 days of gains what we had made, and it is standing at a crucial level of 26,200 odd levels. If we saw, if we see today the market not holding those levels of around 26,000 odd, then we will head towards the previous range of 25,300 odd, and in between 26,000 odd levels. So this would be the range we could trade in case if FinNifty starts trading below 26,000 odd levels. Since there is a positive gift nifty that suggests opening at the higher levels, we have to sustain at whatever levels, maybe beyond 26,200 odd the fin nifty opens. In case if we see it is not sustaining and the sell-off comes, then this 200 point range would be the first consolidation phase for FINNIFTY. And then if it starts trading below 26,000 odd levels, then we would open towards 700 points from 25,300 to 26,000 odd levels. On the higher side, the first trigger or resistance would be 26,500, where FINNIFTY had spent good amount of time, and the expectation was in fact we would move on the higher side towards 27,000 odd levels. But yes, yesterday's sell-off was sharp, and we have to see now if we gradually recover that over a week's time. Else, if we are going to trade in the consolidation phase for a very long, 2 to 3 weeks. Now, let's move from the perspective of open interest. So, open interest on the FINNIFTY seems to be, quite weak. So as you could see, at 26,000 odd levels, there was significant open interest positions on the put side that got unwound, despite we are trading above the range of 26,000 odd levels. So this suggests that there is some negative sentiment that is prevailing in the FINNIFTY. So as you could see, roughly around 30% to 40% of open interest got unwound, and on the higher side towards 26,500 odd levels, also you see unwinding happening. That is quite evident because we have been trading below the 26,500 odd levels. So it is clearly evident that yes, there should be a sell-off. But then something surprising is even on the call side we see the unwinding at the higher levels that had happened. So this is not something clear as to what the markets or FINNIFTY in this case is expected to do. But yes, we are going to trade in the range of 26,000 odd levels to 26,500 odd levels on the initial stage. If we cross beyond 26,500, then we are headed towards higher levels of 27,000 odd levels. Else if we will trade in this range of 500 points. On the PCR front, overall it is not that positive, and closed at zero point 0.6. At the money it is 0.8, which is which still suggests some positive sentiment, and then some buying is expected to emerge. Now lastly, on the FII and DII investments. Let's first look from the perspective of derivatives. So the FIIs on the index futures have been, excessively adding the short positions. And if you could see yesterday also, these short positions were added to the tune of 15,000. So overall now net open interest positions that are held on futures is 38,000, which is significant. On the stock futures, they have cut down 62,000, kind of positions, and then we are now FIIs are now holding 17.72 lakh contracts, which is still significant. But yes, gradually we would be seeing some positions being shaved off. On the index options, on the call side, they are long 1.73 lakh contracts. However, on the put side also 2 lakh positions of contracts have been taken. So this suggests overall they are still short to the tune of 26,800 odd contracts on the index positions. So FIAs overall seems to be negative. Now let's see from the perspective of proprietary traders. Even proprietary traders on the index futures have taken short positions or holding short positions to the tune of 13,000 odd contracts. On stock futures, they are mildly bullish to the tune of 2.84 lakh contracts. On the call options, they are long with 52,000 odd contracts, and on put options there is no significant position at all, just 1600 odd contracts. So net proprietary traders are taking long bets with 51,000 odd contracts in the index options on the longer side. So in case if market opens positive today and trades, proprietary traders are the ones who are going to make decisive profits. Let's now look from the perspective of retail traders. So on index futures, retailers are long to the tune of 35,000 odd contracts. On stock futures, they have been holding long positions for 17.62 lakh contracts. On the call options, they are short by 2.26 lakh contracts. And on put options, again, they have heavily taken short positions to the tune of 2.49 lakh contracts, which overall suggests that retailers are holding long positions to the tune of 23,000 odd contracts. So DIIs or retailers are long, proprietary traders are long on index options, and FIIs are short. Now, in our last segment, let's see what the cash market suggests. So DIIs have significantly added long positions, or significant buying was seen yesterday to the tune of 6,738 crores in the cash market. However, there have been a big sell-off from the FIIs in the cash market to the tune of 10,000 odd crores. So net 3,000 odd crore sell-off was seen yesterday. And on the FII side, we also see good sell-off on the derivative side. So overall, it suggests some bearish sentiment from the FII side on the overall markets. However, proprietary traders and DIIs are supporting the markets. So overall, yes, on the Nifty side, we can expect immediate support coming in around 24,500 mark, and any breach below that could lead to a further downside. And on the resistance side, so today we would be seeing 24,800 odd levels as the first resistance, and then 25,000 as the second resistance. So that's it maybe from our end. Overall, investors are expected to remain vigilant and watch for the cues from the global markets too. So it's crucial to exercise caution. Uh, in fact, in today's trading session, if we see further sell-off, then there is no point in holding long positions, and look for sideways kind of trades. Else, if go short if you see significant sell-off coming in even today. So let us know what are your thoughts on how the markets are expected to trade today. Put all your thoughts in the comments below, and don't forget to like this video and share with your fellow traders, and subscribe to the channel for our daily market insights. Hit the notification bell so that you don't miss our next updates on similar kind of videos. So until tomorrow, happy trading and stay safe. Thank you.